finding rules that tilt the playing field are a lot easier. And literally, I don't think I've tilted the playing field by very much, but tilting the playing field by a little bit got me in front of you, which is I really do think it's pretty extraordinary and an amazing testament to the power of that. So,
hey guys, what would you do if you had 650k laying around with nothing to do? Well, the guy we are going to talk about today would buy a lunch with not only the best investor of all time, but one of the greatest people you can learn from, Warren Buffett. He splitted this lunch with the Indian investor Monish Pabrai, which we already covered in this YouTube channel. And this is the guy we are going to talk about today in this video, more specifically about his book, The Education of a Value Investor. This book was very important to me because it was one of the first books about value investing I've ever read, and I enjoyed it a lot. So let's take a dive into it and see what nuggets we can pick from it. So let's take a look at takeaway number 1. The first takeaway from this book is get a mentor. Getting a compass is the single first thing you have to do in life, or else you will be lost like most other people. Well, before becoming a successful value investor, Guy Spier was an unhappy Wall Street investment banker. So, in the moment he discovered Warren Buffett, he became obsessed with him and used him as a compass for everything, starting to ask himself, what would I do if I were Warren? So, the ability to model our other people's behavior into oneself is the single most powerful self-development tool. Well, just think about how children learn from their parents and their environment. There's a caveat though. Never forget to be yourself and know well what to mimic, since if you model everything you see in a successful guy like Warren Buffett, you may end up also modeling bad habits that you immediately know won't fit you and eventually will lead you to make some mistakes or be unhappy with your modeling.
There is no reason also to look only for living models. The eminent dead are in the nature of things some of the best models around, and if it's a model is all you want, you're really better off not limiting yourself to the living. Some of the very best models have been dead for a long time.
The whole purpose of this method is to find truths that others have too and cross-check them. It's difficult, if not impossible, to become a successful investor or whatever you want on your own. The greatest opera stars have singing teachers. Roger Federer has a coach, and Buffett meets regularly with like-minded people. Now let's take a look at the second nugget from this book. Well, if you want to be a successful investor, you must find out what makes you rational. For example, for many investors, debt deteriorates their thinking process. Guy Spier gives an example in his book that due to the crash of Lehman Brothers, his capital was at risk. Well, more specifically, the capital of his father. If you are in investing for the long run, there's no need to make money fast, with the risk of getting wiped out. As Warren Buffett says, you must not risk what you need and have for what you don't need and don't have. Another must, if you want to find out what makes you rational, is to check what are your emotional vulnerabilities. This starts with a deep introspection and self-knowledge, and it's not an immediate process. In fact, we never fully know ourselves and our vulnerabilities, so we need to make an effort to improve along the way. The third nugget we have from this book, it's actually tune out the noise and create your own Omaha. So how did Guy Spier recreate Omaha? He basically decided to move his office to Switzerland in Zurich with his family too, and yeah, he recreated his own Omaha. He set it up his office in a way that tunes out all the noise. He doesn't have the distractions of Wall Street, the Bloomberg terminals, and all those kind of stuff that makes your thinking. As I already mentioned before, one good way to tune out the noise and recreate your own Omaha in a less extreme fashion is to delete, for example, social media. You don't have to do this permanently or forever. You just have to do this until you feel comfortable with your own process and your own strategy, because it's much easier, and trust me on this one because I have done this myself. Follow your own path because that's the only way to success. In fact, authenticity, it's the key to success. If you are not yourself, you won't be sustainably happy, and your initiative to be successful or whatever it is won't feel as a success if you are not yourself. So this is a pretty important thing to figure out early, because once you are developing your own personality as an investor, as a person, it's much easier if you are authentic to yourself. For example, as I'm doing this channel, I try to be very authentic, because I know I'm not the best at recording videos, nor the best at giving advice on investing, but I'm actually sharing my path, and this is actually my education of a value investor. So I think it's very important to be authentic, and Guy Spier thinks that too. So at this point you might be asking, okay, is this a book of self-improvement and fluffy stuff, or is it an investing book? Well, it is an investing book, and now we are going to share some of the investing principles that Guy Spier transmits in the book. Well, his first and most important principle is reject all sales calls or attempts to sell you something. So he doesn't talk to management directly, because CEOs and management are one of the best salesmen in the world. That's why they got to where they are, and they have to know how to sell themselves and their company. Well, the second investing principle is follow the strategies and decisions of the investors that you most admire and you would like to model. In this case, these investors were Warren Buffett, Seth Klarman, Charlie Munger, Joe Greenblatt, and much more investors. In the case of Guy Spier, you should strive for modeling and try to rationalize the decisions of other investors in your own way. Well, the third investing principle or investment suggestion he gives is actually a suggestion on investment conversations. When you have a conversation with other investors, or even in an investing forum such as the Value Investing Club, Value Investors Club, or some other websites, you should strive to follow 3 rules which he copied and modeled from the Young Presidents Organization, YPO, which is a very big organization worldwide, and they follow 3 simple rules. Well, the first rule is that it should be confidential. The second one is no one should tell the other one what to do. So I shouldn't tell you if I'm going to sell or buy a certain stock. So the third one is actually no one should have an investment, a business agenda or financial agenda to one another. So I shouldn't be your investment partner or nothing of that sort, because that will also be a possible thing that can ruin your process. Another good investing tip is to ask yourself when you buy a stock if you would be comfortable seeing the stock dropping 50% of its original price at the price you bought it? If yes, then maybe that's a good purchase for you. Next one is having a checklist based on self-awareness and your own vulnerabilities. At the end of the video, make sure to drop down to the description because I will be sharing with you guys my investing checklist. I hope that you liked this video. I tried to keep it as short as possible, but I am still improving on that one, so please forgive me if I was too long. And I hope again that you are having a wonderful day, and don't forget to share the best ideas with other people, because that's the way that you improve, and you improve your circle and your environment.